Earnings season is still in full swing. We got lots more companies coming up this week. I'm going to go ahead and cover a few that I really like. And so let's hop on over to the earnings calendar for the week now. We have Activision Blizzard going on Monday evening, and this will be really interesting. And it really kind of brings my attention over to China, because there's global recession. China's definitely hurting right now. But in recessions, even with less consumer spending, people do tend to look for more distractions. And that usually plays out well for streaming companies and for the video game industry, as people will spend more time gaming to distract themselves from the fact that they can't get a job and that the economy sucks. So for Activision, this will be really interesting. However, the negative factor that might affect them is the fact that China does still have restrictions on gaming, how long kids can game. You know, they do this even with their social media networks, like their version of TikTok, which only allows access during certain hours of the day and is absent of a lot of gaming or even fun activities. Instead, focuses more on physical fitness and education and the sciences and maths. So it'll be interesting to see how this plays out. And so if we head into Tuesday, we're kicking it off with AMD, and we saw Intel get crushed, not do so hot. I'm kind of been worried about the semiconductor industry, especially since we already got that run up because of the new bill that was coming up. And I do wonder if these earnings reports will be sell-offs. We saw Intel have a big sell-off, although a lot of that was from mismanagement of the company. However, I saw this as a buying opportunity. There's two things I like there. One, the stock is just purely at a great evaluation for the company. In my opinion, I think market turmoil could send it a bit lower, but I did take that capitulation as a chance to buy. And the second reason I thought that was great was that the company took ownership for the lack of execution and the earnings miss. And to me, that shows great leadership, shows leaders that are paying attention and taking responsibility. I like to see that. Wasn't much blame for external factors. It was full ownership and responsibility. Love that. So, advanced micro drivers will be interesting to see. But if we head over to the Starbucks Corporation, who in the world wants to pay $10 for a cup of coffee in a recession? I think this company had hit extreme marks on their pricing, and I think that they're going to continue to the downside. This is not a commodity. This is the little bonus drink you get as a reward. And of course, when you got tons of stimulus in your pockets, you're willing to spend extra for a cup of coffee. I do expect this to change for this company, and this company has done a good job of seeing that coming, though, and closed lots of the stores that were not performing well heading into the recession. So it'll be interesting to also keep an eye on Starbucks. PayPal will be another really interesting company to pay attention to. I don't really have much perspective here. I was actually surprised by the lack of performance that this company has had, even to this point in the year. It's had a nice little comeback from its lows, but we could see that the expectation is that this company is going to be regressing in its earnings, coming down from last year's. So we'll need to see if that actually plays out. If it doesn't, there could be a big surprise to the upside for this company. Airbnb's next. Airbnb is going to be really interesting. This company is supposed to be reaching profitability. Yay, yay, yay. Loving that. I do have a position in Airbnb. I like them in the long term. There's a few things I don't like that are going on right now. There is a lot of confusion and frustration through the growing pains of this company when it comes like the additional cleaning fee for COVID. However, I think that this will work itself out over time, especially as some of the COVID cleaning fees will come to a close. And I do overall like the perspective of the company to play to the actual people who are renting out their residents rather than the customer, because you want to play to those people who are giving you the most value, and the most value is by participating in the program that you have built and the platform that you've produced for them. The ease for the customer is already there. You just need to make sure that people are still using you as an avenue to reach those customers. And I do like that they have focused on that, because that is what is actually generating them revenue. And I don't have much fear of the hotel industry for them. And on Tuesday, we're also going to have a financial company, Sofi, who's beloved on the social medias. And as I've reiterated many times before, I do not have high confidence in this company. Most of their revenue is coming from student loans, and that is really hard to make a profitable business. And there, as you could see, they're still struggling to reach profits. Not much of a surprise here. I still don't like them. I mean, just another example of why I don't like them. When I think about how much they spent on marketing and how little return they got on those marketing dollars, it just shows me how outdated this company is in the way they think. And it just shows to me weak leadership. And I don't like it whatsoever. Even if you just compare it to other companies within the industry, there's so many other names that I'd rather buy in the world of finance, including a lot of the crypto companies like Coinbase. There's also going to be a lot of solar power companies that are going to report this week. I'm just going to cover SunPower in particular because it's the first one I noticed. And this is going to be my broad view for pretty much any of the actual solar power producers. We saw Enphase perform well, and that's because they supply different equipment to the industry, which is easier to scale and easier to lower your bottom line. However, solar panels are expensive, and the technology needs to innovate more so that there's a greater conversion of actual energy, and prices need to come down. However, with supply chain issues, and even with tons of government stimulus helping the sector, these companies are having trouble really boosting their revenue. And we could see that. So I'm starting to wonder if this is going to be some stagnation in the actual growth of these companies, despite all the money that keeps being pushed into the sector. You know, I also can't ignore the fact that this company seems to always sell off after earnings. Even when the stock's been flat heading into earnings, we've still seen a sell off into the actual earnings report. And that's just because it's really hard for these companies to actually scale up in their revenue. If there's no real growth, why would I put my money here? And I mean, just think about it. If I wanted to invest in the most technologically advanced solar power company, would I buy an actual solar power company or would I just buy Tesla? I think that's a no-brainer. On Wednesday, there's several earnings that stand out to me. eBay, Lucid, Fisker, another EV company. They're all going to be reporting. Fastly's another one. None of these really interest me. I don't really have any big commentary on these other than I think Tesla is likely going to eat up the EV. Okay, be honest with me here. When's the last time you actually planned out your spending, your finances, or planned for your retirement, or how to preserve the wealth you already have? Listen, you need to call Rob Reed. There's no one better. Learn about different investment strategies to help you create or preserve your wealth. It's for your success. You know you need to get it done. I know you've been pushing it off. But honestly, learning about index-based life insurance, which is basically like a rich man's Roth IRA and allows me to be my own bank, was huge. So if you want to learn more, call the number above or visit cwrpcg.com. Industry as a whole, and then other already existing brands like Ford and GM will play a role in that as well. And I'm really worried about companies like Lucid. However, I know lots of people who are big into finance who hold strong opinions on Fisker and think that Fisker can pull through because of the leadership that exists in that company in particular. However, I don't have any commentary on it outside of that because I yet myself have not done that fundamental analysis. On Thursday, we have Doximity. This is a really interesting one because this company has continually over and over surprised on expectations. This is one of the companies that's eating T-Doc's lunch, which is Teladoc. And I'm going to be interested in seeing how this one plays out. We could see that the estimate is right in line with what they made last year, but the growth that this company has been putting up makes me think that this could be another surprise to the upside yet again for them. Also, we have AMC. AMC will be really interesting. The company took the large amount of funds that investors dumped into them and they reinnovated themselves in a very impressive way. I mean, I've been to the new theaters that they've completely redone. They put in new bars. They turned basically the front part of the movie theater into like a sports bar. Then they renovated the seats. They changed their advertising style, rebranded Marcus Theaters. Smart moves in the dine industry to try and stay alive and to try and make the movie-going experience more of an experience rather than just, oh, I went and saw a movie. It's, oh, I went to the movie, we watched a sports game, we got some food there, we had some drinks, then we watched this awesome film, and then we played some arcade games that they had put in. They're trying to make this more of a destination, more of this as an event. However, it's important to note that the company is still not reaching profitability. So we need to keep an eye on this, on how the forward guidance turns out. But remember that in a recession, people do love distractions. So it'll be interesting to see how this plays out. On the other side of this company, though, streaming companies could look to start to not offer all films in movie theaters or they could actually pivot the other way and look for different movie experiences where like a special film gets featured in the movie theater. That could be an interesting pivot that also plays out. And I think AMC will be the big one that they want to partner with, because this is the beloved movie theater company. As the stock market has already shown, people are going to continue to hold this stock. If people continue to hold this stock, and they can continue to have liquidity to play with so they can reinvest in themselves, they actually might pull out on the other side. I don't have the same expectation of GameStop, but I really am starting to kind of edge on a more interested side when it comes to ANC. It's also important to note that this company still has a very large cult following in the holders of the stock. So anything that can even be twisted into a positive view will likely get very positive reaction out of the stock. Coming in on Friday, we have Twist Bioscience, which is still holding large allocations in many biotechnology funds. And I still like this company a lot. However, we can see that they're continuing to get deeper into debt, despite the fact that they service basically the rest of the sector through their large databases. I still like this company a lot, and I'm going to want to hear a lot about the innovations that they have and continue to see growth in the technology. Not so worried about profitability yet, because I think it will come as the sector continues to grow. However, you can't ignore how worrisome it is that this company continues to bleed money. We'll want to see that there's still strong funding so that they continue to exist. Lots of great companies just run out of money, and we don't want to see that occur here. We also have Draftkings on Friday morning. Draftkings will be really interesting, seeing a lot of the competition eat their lunch. And I didn't see them make a big push for the esports sector, which I really would have liked them to see. It seems like e-bets or esports bets seems to be eating that sector for them, that subset of, I think, the new generation of sports betting, which will be esports. And I think it's very large. And I'll be wanting to see them kind of branch out more into that. I don't like the casino pivot. I think that kind of just gives them more liabilities. But then again, I don't like going to the casino, so I'm not sure if I give a fair valuation of that. However, I still think that this is an interesting company, especially at a $13 entry point. Seems like it could be at a large discount, and we've seen some improvements. We don't want to see another big miss like we did last quarter, though. So it'll be interesting to see how this stock continues to play out. And I do want to quickly backtrack to Tuesday for a company that I missed that I want to cover. That's Exact Sciences Corporation. This company is very interesting to me, and one of the things I want to mention is that it was one of my top 5 biotechnology companies that I shared with subscribers for why I like them. So if you want to read about that, subscribe to the Discord and you can read more about that there. One of the things that I will add is that this is still one of the top holdings and a lot of biotechnology funds, including Kathy Wood's genomic fund, ARCG. So that'll be another one to keep a good eye on. If you like this segment, make sure to leave a comment and a like to let me know that you like this content, and I'll make sure to put extra effort into it and maybe even do some technical analysis for each individual company. Anyways, I hope you enjoyed the video, and hopefully I'll see you next week for another episode. Remember, that completely depends on the feedback I get.